the story changes so quickly. It goes from we care so much about inflation and interest rates to now we're scared about growth or worried about growth and inflation rates. And now we're back to things are benign on the inflation front, but now they're back to retail sales being more robust. How are the markets taking this? We know that they've been bid for the last 2 weeks now.
Yeah. It's all tied into the fact that are we in a soft landing or is it something worse? From our view, nothing's really changed, but that doesn't mean that the market isn't going to render its opinion, and it's been very much a bipolar.
But on a daily basis
that's
sometimes.
Correct. Yeah. You'll get a couple of data points that the market will key in on, and that's always a risk when you just focus on, one data point. A couple weeks ago, we had a bad unemployment print, and that really concerned everybody. I was traveling in Europe, and I was amazed at how quickly the market just responded to just one data point, which is the biggest risk of just focusing on any data point. I will say that most recently, the inflationary data is pointing towards giving the Federal Reserve the green light to begin the process of lowering interest rates.
Okay, so if that's the case then, that was because inflation is coming down and there was also a growth scare, let's call it, between the jobs data. We've had some other economic data that's showing signs of a slowdown. The Fed doesn't want to be behind the curve, so to speak, with regard to this. How exactly then would you justify the move that we've seen back into the safety trade that has been really, I use it tongue in cheek, but people buy mega cap technology because they want the growth and they want the relative insulation.
Yeah.
Do you think as though that's the right thing to do this time around if this market has legs to the upside?
I don't. And you're seeing the evidence that the market is broadening out, which is why I'm very bullish on small and mid-cap stocks at this point.
They haven't recovered as quickly in the last 2 weeks.
They have not. But, you had sort of a short covering rally in July, and that's kind of like the early phase of what you'll typically see. But, actually, the profitable component of both the Russell 2000 and the Russell 2500 have held up much better than, say, the less profitable components of those benchmarks. And I would focus very closely on financials, namely the banks. The banks have held up really well in this pullback in the marketplace. And if there was something that was really insidious or a bigger slowdown occurring within the broader economy, you'd see it in the banks pretty much.
Dan, I remember it wasn't that long ago. I can maybe even count the weeks or months.
Yeah.
Certainly the last couple of years, when commercial real estate and the exposure that some of these small and medium-sized banks would have to possible CRE losses were overriding the conversation.
Yeah.
It doesn't feel that way now. Do you think that's justified or not?
I do, because with the prospects of lowering interest rates, that's going to cause a steepening of the yield curve going forward. With regards to the small mid-cap banks, that's exactly right. There were a lot of concerns about asset quality, but the asset quality has been quite good. And you have extreme valuation support here for those small mid-cap banks. Normally, small banks trade at a premium to the larger banks, but this is they're trading at a very significant discount to the money center banks and the super regional banks.
And Dan, before we let you go, how exactly then, as an investor or trader, do you look at which mid-cap banks you want to go and buy? Is it geography? Is it the kind of business loan exposure that they have? What goes on the shopping list for you?
You want to buy the best management teams, and you want to have those. You want to look at those bank balance sheets to see where those exposures are. All real estate's local, so you're right. The regions of the country are going to be very important as well. And then not paying too much and looking for where those banks can really do well. And in this environment, I think the setup is really positive, not just for banks, but for small and mid-cap stocks, not just as a trade, but as a long-term secular move.